Good afternoon, everybody. Let's get started with our team afternoon meeting for Monday, July 25th. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I'm out of Amazon, I'm out of Netflix, I'm out of FTCH, and I have entered some Snap. Alright. Let's do it. So, real slow day for the market here, right? SPY's finished up about 0.25%, I think that's where we opened. Q's here relatively weak. Good, strong bounce in the last 15 minutes or so of the day had us only close down 0.4%. We were down a percentage point, a little bit more at one point in the Qs. They were relatively weak all day today. And the IWM was our leader, up 0.6%, which I always love to see. And the other thing that I always want to see some leadership from is semiconductors. AMD put in a really nice looking tail today. We discussed in the morning meeting buying a pullback to 85 bucks. Low of the day today is 85.12. So I don't know if anybody caught it. We have NXPI just reported here after hours. Seems to be a pretty muted reaction so far. Trading about where it closed, down a little bit from where it closed. So we will see if that develops into anything. Overall, starting from our big picture, we always want to start with the big picture. Very slow day today to begin what should be an extremely exciting week. We have a lot going on this week. We've got, I think, 50% of the S&P by market cap is reporting this week. We've got Microsoft and Google on Tuesday. We've got Facebook on Wednesday, and we've got Apple and Amazon on Thursday. That's on top of the fact that we've got the Fed on Wednesday. We also have that PCE core inflation number, whatever they call that, coming out this week. We also have second quarter GDP coming out this week. So it is a week that has a lot packed into it. And what we discussed in the morning meeting today is that even though Friday was a weekday, we were due for a pullback. We had a really big move. We kept flirting with upside extension, like never getting so extended that the layup short was there, but never pulling back enough to create a strong buying opportunity. Friday, we finally digested through price a little bit. We came down, and that was partially technical, partially fundamental, as Snap had another earnings disaster that brought down Meta, Google, Pinterest, all the other names, and kind of helped to create some broader market weakness on Friday. I'm still of the opinion that Snap being down 40% on that after having already warned and being down a ton on that is a little bit overdone. I think Evan on the VTF on Friday was saying that Google was down the market cap value of 2 snaps off of Snap, which doesn't make any sense. But the other thing that we discussed on Friday was, even if you want to come in and buy Google or come in and buy Facebook for trades off of the Snap news because you think it's ridiculous, and it's kind of the camp that I was in, you have to be careful because the market was telling us that it was due for a pullback. So maybe you get an opportunity to kind of dip by a Google or a Facebook, but just be cautious on having to fight the market. And that's pretty much exactly what happened. We had good opening trades on Friday and some of those names to the long side, but the market just was very heavy, kind of downtrending, just price correcting. And we said Friday morning that the SPYs could pull back to 393 today and be plenty healthy. Well, guess what the low of the day was on Friday? 392.75. So this so far is a healthy pullback, right? The space that the SPYs broke out from, and SPYs broke out after the Qs and after the IWM, the space that the SPYs broke out from, that resistance zone, is between 390 and 393. So seeing a pullback to this 393 area and seeing the market defend it as this ADMA catches up, that's exactly what you want to see. I mean, even with today's price action and Friday's price action, we still haven't even touched the ADMA on the daily chart. So there's nothing inherently bearish about the technical pullback that we saw on Friday. And if anything, it's potentially what you want, right? It potentially, it's when the market goes straight up, you don't get setups. And that was part of the problem that we were experiencing, like, Wednesday and Thursday, is that this market was kind of just going straight up. It wasn't giving us the setups. If you want good tradable price action, whether it's a market that's moving up or a market that's moving down, you want corrections. You want pauses. It's the corrections and the pauses that are they moving here after hours? You have something going on with Walmart after hours. Were they supposed to report after hours today? I didn't know that. If they were, I'm not sure what the news is. Not sure if anybody's got it. Walmart lowers profit outlook for Q2. All right, well, this could be the next ball to drop. This could be the next ball to drop right now. Anyway, lost my train of thought a little bit on the market as we get more bad news that comes out. Oh, basically what I'm saying is, if you want a good tradable market, whether you're bullish or bearish, let's just say you're bullish right now because, well, very small time frame on the daily chart, we are bullish because we're above resistance. You want the market to ebb and flow. You want pullbacks. You want rests, because that's actually what creates the setups that can get you involved for the next leg of the market. So Friday's pullback was fine, and you need to just be careful fighting the market. And the flip side of that was a couple of you guys, I think led by Josh, called out some great shorts near highs on Friday. So that was great. So now we come into today's price action, and the question is, after Friday's price correction, can the market kind of catch a bid back up a little bit? Was it the price correction that was needed in order for continuation? I want to say yes to that, but the flip side is we've got so much coming up this week that there's a real chance that market participants just take a pause and they say, hey, how about we wait for the Fed to come out? How about we wait for Apple earnings to come out, Microsoft earnings to come out? How about we wait to see what this GDP number looks like before we start, taking real price action here? So what we end up happening at the end of the day is we have an inside day for this bias, just an inside day, which is good. This helps potentially set us up. We have an inside day for the IWM, which is also fine and good. It lets things settle. And the Qs, we have some relative weakness. The Qs basically pulled back to exactly the 80 MA on the daily chart. Relatively weak, gave a little bit of a rally into the close, and we'll see what happens. It seems so. The Qs are relatively weak. FANG stocks were weak today generally. Tech stocks were weak today generally. And it just seemed like the market is hedging itself a little bit. It seems to be what some of the option flow that we saw today kind of corresponded with. It's just people making bets into earnings reports a little bit with options, and people kind of hedging themselves a bit is what it seems to be to me. So the question still remains if we are setting ourselves up for higher. We did see some interesting, broader market data this morning, which is stuff that I love to pay attention to, what I just call market dynamics. We know that there's still a lot of shorts out there. We know there's still a lot of cash that's out there. And even just the dynamic flows that tend to come into the market, we're still in a market where buying leads to more buying and selling leads to more selling. So if all of these events this week cause this market to break down, that selling will lead to even further selling, and you could see a very fast sell-off. But it does seem like the data shows that the maximum pain point of the market would actually be to the upside. And that and I'm certainly not saying that this is happening, I have no idea, there's so much going on this week, but if these events cause us to break up, it could be a very fast, dynamic rally to the upside as money flows back into the market, as funds kind of re-leverage into the market. But that's certainly a big if. And then seeing this Walmart come out right now after hours is exactly what you want to be nervous about if you're bullish at all. If we see a lot of bad numbers start coming out from I think that Microsoft tomorrow is going to be massive. I think Microsoft tomorrow is going to be huge. So just a lot of wait and see stuff going on right now with kind of where we're at. And from an intraday trading perspective today, first thing that we did a really good job of very early was recognizing to not trade a lot. I think the market told us that pretty quick. If not in the first 10 minutes of the day with these two red bars, certainly by the time you had this IWM like trying to get above 180, but it was so lackadaisical, couldn't really do it. And that was as the Qs are breaking down to lows. You had the Qs making lows on the day, as the IWM was like struggling to get above this 180. There was really not a lot of conviction to be had from the market itself. There were a couple okay trades out there. XLE, you know, we recognize the strength in this XLE. It was a little bit sloppy. We were trying to call it this flag pattern. It was a little bit sloppy. Oil gave a downtick at around 10.05 that kind of caused this low to break. Usually this low, when the ADMA catches up, should hold. So if you're trying to be long versus this low and you got in a little early, like if you got in on this green bar, which would make plenty of sense to me for somebody to do that, you got shaken out when oil itself gave a quick little downtick. But it reset up with this inside bar. That inside bar broke to the upside. Josh called it out. I called it out. So this in the volume increase on the break of the flag and the break of the inside 5 as the ADMA caught up. That's exactly what you want to see. So XLE was probably the trade of the day. You probably could have gotten involved in some of these names with it. And we also discussed in the morning meeting just to have it on the radar because this XLE daily chart looks so much better to me now. These first few days when it had gotten up here, I kept saying, I don't like it yet, I don't like it yet. It's just getting back into equilibrium. Let's be a little bit patient. Let's let it set up. I like this tail down here that we had on Thursday. Friday was kind of a nothing day, but you start to build out this wedge here with this tail that to me looks like the potential lower high that then breaks you up. And this is that classic like reversal pattern that I talk about when I do my candlestick class. Like how does a reversal actually happen? How do you go from a pattern of lower highs and lower lows to a pattern of higher highs and higher lows? This is exactly how you do it. You get the oversold snapback into the equilibrium area, then you get some slop in that equilibrium area, you break above, you break below, but in the breaking below, you get a higher low, which that oftentimes looks exactly like this tail. It goes below the ADMA on the daily chart, gives you that tail, and then within a few days you're breaking above that high, and now what do you have? You've got a higher low and you've got a higher high after today. So XLE has officially given a small time frame daily chart reversal as of today's close. So anybody who's long XLE from this day that we talked about getting long, I unfortunately got shaken out of that position, or anybody who got back in on this day, which we discussed as well, or anybody who bought today, you're looking real pretty with your XLE. So that was probably the trade of the day. The disappointment of the day for me today was this snap. I had snap on the radar. I was wondering if snap could do a repeat of what it did on the earnings warning day that it had just given pretty recently, a couple months ago here. I gave that warning on May 24th. It sunk the entire market that day. It was very weak. It grinded down all day. The price action on this day was extremely similar to the price action on Friday, and that turned out to kind of be the low for a lot of these social media names. The next day, Snap had fully retraced that down move, gave a 3-day up move almost into equilibrium, then before consolidating a bit. That turned out to be the absolute low for pins that day. So I was kind of looking for a little bit of a repeat with that. I thought that if Snap could get back above yesterday's low, Friday's low, which was $9.91 slash the $10 spot, that I thought maybe we could get a similar type of situation. And so that had Snap on my radar today, that had pins on my radar for today, and then the thing that makes it the disappointment of the day is that it traded so well for the first 15 minutes. First 15, like it was set to gap down. It got 2 downgrades this morning. JP Morgan downgraded them. Somebody else downgraded them. Congratulations to that analyst. You're doing a great job continuing to chase price. But the first 15 minutes here, they bought this thing back very heavily. You can see the market, first 2 5-minute bars for the market, just straight down. First 3 bars here, 5-minute bars for Snap, going straight back up, back through that 991 from Friday's low, back through $10, and then it ran right into this 13.10 to 13.13, which I just remember. It was more memory than anything. I can see it on the chart here a little bit. This is a fake tail from Friday. But I remember that kind of being a little resistance. You can see these highs here. 10.13, 10.12, 10.12 in the early afternoon for Snap on Friday. It ran right into that. And then what looked like a great opening opportunity here just flatlined to an incredible degree. Snap traded 137 million shares today within like a 5-cent range outside of the first 15 minutes. Like, this thing got stuck between $10.05 and like $9.92, 93 cents for the entire day over the course of 137 million shares. That's just really crazy. I've seen that happen before. I don't know what to totally account that towards. It's just like supply and demand seems to reach some sort of perfect equilibrium as you've got dip buyers coming in and buying and some massive seller or sellers just sitting on the offer and not letting the stock actually break up. So, yeah, XLE turned out to be the trade of the day. Snap and pins, for me at least, it turned out to be the disappointment of the day. I really, truly felt, it just didn't happen, that if Snap could have broken up early, like really gotten above that 10.10, even if it, fine, initial move here, tops out at 10.13 after a really big move from 9.66, and then rests for 2 bars and then breaks up, even if this thing was breaking up at 10 or 10.15, I still think that if this Snap was really able to get above 10.10, it could have easily given a move to 10.50, 10.75, and that would have moved all of the growth stocks that got beaten up with it up to the upside also. Like, there was a moment in time today where, like, Roblox had this sick third 5-minute bar of the day where it went from looking the open was kind of nutty today. I just remembered that. The open was kind of nutty because the first 5 minutes we saw a lot of these stocks getting smoked, like XBI getting smoked. And then the third 5-minute bar of the day was a massive snapback. Some of them, XBI I have up here, didn't break the opening high, but some of these names broke their opening high. Some of them went green. They were looking really good. This Roblox, as just kind of an example here, pins I know was a little bit tricky because it was the same thing, right? We were looking at it right off the open. It opened up green. They wrecked it the first 10 minutes. Next thing you know, it's breaking highs. When this thing broke highs, I was so excited about what some of these stocks looked like. Like, you 100% negated this opening down move here. If I can just get some follow through from this Snap, I think everything else is going to go, and then all that stuff just flatlined. Pinterest flatlined. Peloton was another one that I was looking to give a bigger bounce off of that. That thing basically totally flatlined. Snap, as we know, fell into this crazy 15-cent range, or less than 15 cents even. So we'll see. I'm going to keep on the radar. At this point, they might need to wait for Facebook, Google to report, to move secondaries on them. So that was the disappointment of the day, but there was certainly some good stuff out there with energy. And that's all I got. Otherwise, we are sitting here looking at an inside day for the SPYs and an inside day for the IWM, and the market just seems to be totally in wait-and-see mode right now. Big, big, big week. So with that said, happy to answer any questions that you guys have. Yeah, so how's Walmart looking here after hours? Down 8%. Walmart smoked off that. Target pulled back a little bit on it. Amazon pulled back too. You guys keep talking about this AT&T and Verizon, and I'm with you on it. It's crazy to see Verizon and AT&T down to the degree to which they are. It's like, people really no longer paying their cell phone bill because they can't afford to. Like, that's pretty wild. Pretty wild. Like, we were chatting, I think, on Friday, like, about what are you going to stop paying for first? Like, your internet or your heat? And I said, like, honestly, legitimately, would probably stop paying for heat before I stop paying for internet. Like, internet's a utility. Like, you need to have internet in this day and age. You don't have internet, you can't do anything. I need enough heat to make sure that my pipes don't freeze, but otherwise, let me throw on some blankets and keep my internet on. Just nuts. From Diego here, and if Verizon and T are down like that, what's that say about Apple? Yeah, I mean, it's going to be an interesting earnings report. It's going to be interesting to see what Apple says, because there was also some chatter, I think Brant put into the VTF this morning, some analysts was saying that they're expecting Apple to make an entire different business model for Apple today to focus more on recurring revenue. Maybe that's going to be in conjunction with some sort of earnings miss here. I don't know. Where they're trying to cover that by talk about, you know, a different model. But the thing is, you know, Apple's the premium phone. So I think that, you know, I mean, look, this is just what the data and studies show. That it tends to be wealthier people have iPhones and less wealthy people have other phones. And that's not to say you can't be a super rich person and be on an Android phone. Of course you can be. But that's what we tend to see. So, you know, for the wealthy people out there, I don't see them stopping buying their Apple products necessarily. I don't think it's, you know, I struggle to see the person who can't pay their Verizon bill anymore is the same person who has an iPhone. But maybe I'm wrong. Could easily be wrong. Time will tell. We will see on Wednesday. Gabriel saying maybe people are downgrading their cell phone plan, so that could mean like a T-Mobile starts to perform better, and you are seeing that T-Mobile is holding up better. Basic NYU economics. Take my heat, but never my net. Yeah, Blaine, that's what I said. You're going to have people who are, you know, Android fans across the wealth spectrum, but if you do actual research on it and you look at people who have phones based on income, you will see that overall Apple users have an overall higher income than Android users. Yep. Anybody else have any questions for today? There's really not much to talk about today. We're just in total wait and see mode. Inside day for SPYs, inside day for the IWM, waiting and seeing on all this economic numbers, the Fed, the earnings reports. So much happening this week, and not much of it happening on Monday of this week, which was today. So I'm happy to answer any questions. Also happy to end the meeting a little early because I got to catch a train back into New York City, where I will be for the rest of the week. Thanks, Matt. So Matt's saying the average salary of an iPhone user in the U.S. is about $53,000, while the Android user's average salary is about $37,000. Yep, that's the data that I've seen similar to that. Go ahead, Brett. Give them to me. I'm happy to answer your questions for your benefit and the benefit of the team. I'll wait. Ladies and gentlemen, Brant Hirsch is a real comedian. He's got jokes. Alright guys, we'll call it then. We'll do just a quick afternoon meeting today, quick update on things, inside day. We'll see how the inside day breaks. We'll see how the numbers come out. Have a fantastic night, everybody, and I will see you all tomorrow morning. I got to get to the office tomorrow morning, so it's going to be a rush of a morning for me. But I'll do my best to get all the news in there and Pat's absence, and some of you guys have been doing a great job getting news and information in the virtual trading floor in Pat's absence also. So especially since I got to make a mad dash to the office tomorrow morning, it's going to have me behind. Anybody that can post any early information will be highly appreciated from me. Have a great night. See you all tomorrow.